Your conference is being recorded.
Good afternoon, ladies and gentlemen. I'm Pelshia, moderator of UFO Movies India Q2 FY23 earnings call, hosted by DAM Capital Advisors Limited. As a reminder, all participants will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and zero on your touch-tone telephone. Please note this conference is recorded. I would now like to hand over the floor to Mr. Asim Bade of DAM Capital. Thank you, and over to you, sir.
Thank you. On behalf of DAM Capital Advisors, I welcome you all to the Q2 and H1 FY23 earnings call of UFO Movies India Limited. From the company, we have with us Mr. Rajesh Mishra, Executive Director and Group CEO, and Mr. Ashish Malushte, CFO. We would open the call with brief opening remarks from the management, post which the floor will be open for queries. Thank you, and over to you, Mr. Mishra.
Thank you, Asim. Greetings, everyone, and thank you all for joining our Q2 and H1 FY23 earnings call. Let me start with the updates and highlights. Business continued to operate without any COVID-related challenges in Q2 FY23. We had a total of 522 movies comprising of an astounding 40 films per week in all languages and versions that were released on our network during this quarter. And a total of 968 movies were released in H1 FY23. The number of big budget movies released in Q2 was higher than in Q1. However, the performance of these big budget movies, especially in the Hindi-speaking markets, was below expectations and comparatively lower than the movies released in Q1. The trend in the performance of movies that we are observing post-pandemic indicates the importance of quality of content for the movie business to flourish. Movies with only the big star cast today are rarely enough to pull back audiences to the theaters, and even if they do, it is a story that will help the movie to run longer at the box office. This is what happened in Q2 with several big star cast movies such as Shamshera, Lal Singh Chaddha, Liger, Raksha Bandhan, Ek Villain Part 2, etc., where these films did not perform as per expectations. The underperformance of these movies had a severe impact on the advertisement revenues of not just UFO, but the entire industry as a whole. Advertisers restricted themselves to lower budget allocations for big screen advertisements. In Q2, we had only one successful Hindi movie, that was Brahmastra Part 1, while from the south we had Vikrant Rona, Kartikeya 2, Sitaraman, etc. Two other movies, PS1 and Kantara, that released on 30th September had turned out to be blockbusters at the box office. South movies have continued to appeal to the larger audiences pan-India, and that we believe is a healthy trend, as it will lead to an expansion of the Indian box office market. In addition, with the increase in the number of movies releasing pan-India, our CDC revenue stands to benefit. The same is visible from our quarter-on-quarter growth in CDC revenue, which has grown by 14% from rupees 284 million in Q1 FY23 to rupees 323 million in Q2 FY23. In terms of recovery, CDC revenue has recovered almost to pre-pandemic levels. On advertisement performance, our overall advertisement revenues have declined by 25% from rupees 178 million in Q1 FY23 to rupees 133 million in Q2 FY23. And the major impact is seen on the corporate advertising vertical because of the reasons stated above. Though government advertisement revenue has been similar to Q1 FY23, government is not increasing advertising spends, and this continues to be an area of concern. Coming to the distribution business, in our Q1 earnings calls, we stated that this business has started to shape up well. We are happy to inform you that we continue to maintain the same stance in Q2 as well. During the quarter, UFO distributed 14 movies, majority of which were South films that we distributed in the North market, namely Rocketry, The Nambi Effect, that was released on 1st July, was distributed by us pan-India except for Tamil Nadu. Another big movie, Kartikeya 2, was released by us in Q2 in the North Circuit, excluding Orissa. We believe as more of these movies find a bigger audience in the non-South markets, our business vertical of distribution will see a good ramp up and start contributing modestly. I would like to reiterate that in our current distribution business model, there is near zero business risk. Coming to the headline numbers for the quarter and half year ended September 30th, 2022. Please note, as FY21 and FY22 were the washout years due to the pandemic induced restrictions, we have compared our performance with pre-pandemic period, that is Q2 FY20 and H1 FY20, for better representation of recovery in the business. Consolidated revenues stood at rupees 1078 million in Q2 FY23 as compared to rupees 1251 million in Q2 FY20, indicating a recovery of 86%. Business EBITDA, that is EBITDA excluding one-time impairment provisioning, stood at rupees 54 million as compared to rupees 271 million in Q2 FY20. We have taken up one-time provisioning of 29 million in quarter on our investment in CDPL. Taking the impact of this one-time provisioning, our reported EBITDA stood at rupees 25 million. Loss at PAT level for the quarter stood at rupees 92 million as compared with rupees 35 million in Q2 FY20, the profit. Our half-yearly performance, the consolidated revenue stood at rupees 1984 million as compared with rupees 2519 million in H1 FY20, a recovery of 79%. Business EBITDA, that is EBITDA excluding one-time impairment provisioning, stood at 152 million as compared to 559 million in H1 FY20. Taking the impact of this one-time provisioning in Q2 FY23, our EBITDA stood at 123 million. Loss at PAT level stood at rupees 117 million as compared to a profit of 46 million in H1 FY20. As far as consolidated funds position is concerned, the balance at the end of the quarter stood at rupees 1060 million. On the debt front, as of September 30th, 2022, the company is net debt free with net cash of 227 million. I would like to take this opportunity to thank all our stakeholders for their continued support and trust in the company. With that, I open the floor to take your questions. Thank you.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. We will wait for a moment while the question queue assembles. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. The first question comes from Rahul Thani from Insect Securities. Please go ahead.
Yeah, hi. Thanks for the opportunity. This is Saral here. Am I audible?
Yeah. Please go ahead.
Yeah. So Saral this side. Thanks for the opportunity. Sir, I have 3 questions. My first question is, how is the overall movie business looking to you over the medium to long term? Since in last 6 months we haven't really seen the usual box office performance like the pre-pandemic used to be. So what is your view on that, sir?
So as I mentioned, while in Q2 we had a significantly lower performance of films, especially in the English-speaking market, which had an impact on us. The content pipeline for the next quarter and Q3 and Q4 seems pretty nice. Films like Drishyam 2, Bhedia, Avatar, Panther, Circus of Ranveer Singh, Kisi Ka Bhai Kisi Ki Jaan, of Salman Khan. Adi Purush is also lined up but might get pushed ahead. So there is a very good content lineup in Q3 and Q4, and this we have very good hopes from these films.
Thanks, sir. That was helpful. So my second question is, has the distribution business took off? Since in the last call you mentioned that it is shaping up very well, and now also you had mentioned in the opening remarks. So what is the overall outlook?
But distribution business is picking up really well. We are concentrating mostly on the South regional films and other regional films also, but primarily South films, because that is a very, very synergistic approach for our main core business. In the sense we are able to drive our CDC earnings from that, our advertisement earnings from that. We are able to provide content pipeline to our own screens. So this ties in very nicely with our main business, and I'm happy to say that we have released almost 66 films till date, and in this quarter itself 14 films we have released in this quarter alone itself, which is almost one film a week. So we are seeing very good traction, and business has started to show decent profit. It will be not be significant profits, but this business will be very profitable on a standalone basis itself.
And so lastly, when do you think we will be reaching a pre-pandemic profitability? If I can add to that question, when do we see us reaching double-digit margins? Because we've managed to break even this quarter. So at what revenue level will we see decent double-digit pre-pandemic margins?
So we have three primarily revenue streams. One is the rental from cinemas. Second is the CDC revenue that we earn, and the advertisement revenue. So while the rental and CDC revenues are back to normal, almost CDC revenues, I think 96% it has gone to pre-pandemic. The only area that we have not been able to catch up right now is the advertising front, which again is divided in two parts. From government advertising. Government advertising has significantly reduced. They have reduced their overall spend right now currently, but we expect that to revive. Corporate advertising is catching up slowly. So I think Q3, Q4 will be a better indicator of how we are going to shape up on this thing.
Sir, what would be, that was very helpful. Sir, at what revenue level can we can we reach double-digit margins? Previously we used to do 140, 130 crore with decent 22% margin. So, what number at current stage which will help us to reach double-digit margins?
So, Saral, slightly different way to look at it, and more simplistic way, which Rajesh was trying to explain, is the differential delta between pre-COVID and the current level is purely the advertisement revenue. So if I go back 6 months when the business was just opening up, the bigger concern for us was, one, whether the business would really come back, because our industry was one of the last ones to come back after pandemic. Two, if the theaters open up, whether the content would start flowing and it will continue or no. Both these answers were, both these questions are answered in positivity. Now the challenge that we are currently seeing, so first to give you the numbers, if I see quarter-on-quarter comparison, the revenue almost has caught up, but my EBITDA is still down by 22 crores as compared to my pre-pandemic level. And if you actually look at my advertisement margin, though my revenue is almost appearing to be caught up, my advertisement margin is down by equal amount, which is 22 crore, as compared to a reduction of 24 crore of revenue. So what it is telling us is, the moment my advertisement revenue goes back on track, not just that I'll be hitting my 2-digit margin, but also I'll be back on my EBITDA level profitability at pre-COVID level. Now, there are reasons around where the challenges on advertisement has been, primarily two. One, government, which we have been cautioning the market that has been not spending the way it was spending on digital media, digital cinema media in these pre-COVID days, is the first concern for us as an industry. And second one, which is a little bit of disappointment for us is after a very good 3 months, Jan, Feb, March, when the movie business started coming back. After that, unfortunately, there has been series of these movies which are not performing well, and it's more like a sequential back-to-back disappointments, and that has changed the positivity which was there in the minds of the advertiser, and who started reallocating some of their budgets to the ad medium, in cinema ad medium. Unfortunately, with the back-to-back flops, if I have to actually give you the names, we had Jersey in Q1, we had Jersey, we had Heropanti, we had Samrat Prithviraj, and then Jug Jug Jio. I won't say those were flops, but they didn't really do well the way they should have done. This continued in Q2 when we had Khuda Hafiz Part 2, Part 1 did well. Then you had Shamshera, which didn't do well. You had Ekta Villain. Worst week was Lal Singh Chadda and Raksha Bandhan. It continued with Ligar till Brahmastra arrived. So it's a long stretch of about 3 months when the advertisers on the corporate side slowly started taking a break. So they are not that they don't believe in this medium, but they are saying that the audience must come back. So we feel it is more like a content quality issue, because while Hindi movies have shown this kind of a performance negativity, the southern movies have really done well. In fact, southern dub movies have also done well. So it's, you had first question how you look at movie business. There's no negativity in our mind, but content quality probably should come up to the expectation of consumers, and then people will start coming back. Now coming back to your question that you asked, double-digit growth, not just double-digit growth in the margins, but coming back to profitability would be achieved the moment my advertisement comes back on track. So relatively simple to analyze for an analyst, but difficult to answer in terms of how the recovery would be.
Right, sir. So are we seeing some green shoots on the advertising front in terms of revenues, or it's still some time?
Some green shoots on advertising. Yeah. So after Brahmastra, luckily now the situation is slightly changing after 3.5 months of negative views in the minds of advertisers. Fortunately, Brahmastra came at a time when the festive season was around. So again, this is slowly bringing the advertisers back, and that's what Rajesh mentioned, that if some of these movies really start doing well, and they should, then again we will see these green shoots converting into revenues.
And this is an industry level issue that we are seeing, and advertising will follow the success of films. We have had a lean period, but that is not the way the industry will function forever. And with the success of films, this will quickly ramp up again for us.
Sir, if I can squeeze in one more question as a strategic question. Sir, what is your thoughts on the OTT platform? We are working on, I think, Zinglin and Plexigo. So you want to give some color there as to what is your strategy?
So right now we have not seen much traction on that front, and we have significantly ramped down our cost also on that. We are working on a couple of projects which, when they fructify, we will definitely come back to the market about this. But right now it's on the back burner with very, very minimal costs.
So Saril, just to add one point here quickly, when you say OTT, the way it can be perceived as a company wanting to launch its own OTT brand,
right?
And therefore it will entail investment in content and popularization of OTT, which means it's a deep pocket game. And I would like to clarify that this is not what we ever intended to be. So we have pivoted from the initial phase into the current phase, where we are trying to position it more like a white labeling solution for other OTT players. So that is something which I just wanted to put as a thought in your and others' minds. Okay?
That was really helpful, sir. Yes, sir. I'll fall back in queue, sir. Thank you.
Sure.
Thank you.
Thank you. And the next question is from Aditya Sen from Robo Capital. Please go ahead.
Hi, thank you for the opportunity. I had this question on the cost structure. In Q2, we have done a cost of 105 CR, which is similar to December 19, that is pre-pandemic cost structure. So I'd like to know why the cost structure is growing faster than the revenue structure. Like, we have reached the pre-pandemic cost, but the revenues are exactly the opposite.
you repeat the numbers so that I am in sync with what you're saying? You're saying in Q2, the total cost, which is 105 crore, is exactly equal to, you mentioned?
Similar to December 19's cost, that is 106 crore.
Pre-pandemic. Okay, pre-pandemic cost.
Pre-pandemic.
Yeah, and in spite of that, so what is the, so I understood that.
The question is that the cost structure is back to the pre-pandemic, but why isn't the revenue scaling the same way? Or the other way we can take it is that if the revenue is still at the lower levels, why are we scaling up the costs this much?
So the total cost, more or less, you're right, 98 crores to 102 crores. This is how it is looking like. What we need to actually see is do a deeper dive and differentiate between the direct cost and the SG&A and manpower cost. So if you see the SG&A and manpower cost, SG&A cost has still not reached that level. It is still 20% lower, and that is a cost synergies or cost benefits or cost reduction that drives that we initiated during pandemic is supporting us. Manpower cost has gone up because for 3 years we had not given raise to our employees. The majority of increase that you would see is in direct cost, and even in direct cost, the increase would be more in cost of goods sold, which is a direct cost relating to sale of equipment, and that cost has actually gone up. But whereas the advertisement related direct cost has not reached the same level. It is almost, if I see quarter, it is 3 crore less, and if I see half year, it is 10 crore less. So what happens is, if you look at the total expense as one bucket, then you would have the question rightfully so what you had. But if you do a deeper dissection, this is how the numbers pan out. And therefore, since the direct cost associated to advertisement is low, that is the same point which I was trying to make. When the ad revenue goes up, of course this cost would also go up, but my margin would significantly go up.
Okay, sir. Okay, so got it. Got the answer. Thank you.
Thank you.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. I repeat, ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. Next question comes from Vipul Kumar Shah from Sumangal Investments. Please go ahead.
Hi, sir. I'm joining the call after so many quarters. So,
Hello.
Yeah, sir. Am I audible, sir?
Very much.
Yeah, we can hear you.
Yeah, so I have a general question, sir. After the pandemic, people have moved to OTT, and as yourself alluded, so many good, many megastar movies are not doing well. So I think something has changed for the movie industry. So what is our path to regeneration or restoration of the profitability? As we will appreciate that you had issued the shares in IPO at around more than 600 rupees, and investors have lost 80% of their capital. So, pardon me, but I feel that ours is a broken business model. So, your comments, please.
So, while it is true that some films have not been performing well, but if you look at the all India level, OTT impact should have been happening across the country also. So we don't think it is a OTT impact as much as the quality of films that have turned up in this quarter. South films have done well. South audiences are coming to the theaters. North also comes to the theaters, provided the film is good, as has been shown in the Brahmastra also. So I would not say it's a broken model. It's dependent upon the quality of films that come in. And as I said, out of 3 revenue streams, 2 are back to normal. One, advertisement, which is closely linked to the success of films. This has been seen in other industry players also. Same level of dip they have also been seeing. So with the improvement in the quality of content that comes in, this business will surely come back. I don't think there is a serious broken issue about this business as such.
No, in that case, you should be getting more advertisement in the southern India. No, you said there you are not facing any content problem, and there you should be getting more advertisement. But that is also not happening, sir.
Yeah, it will happen. It will happen. It's a growing trend, and it will pick up across there also. It takes time for the advertiser confidence to build up, which was hit by the pandemic, and then by the failure of films. It will pick up.
No, because right now government finances are also in very good shape. So why government is reluctant to spend on this media? I fail to understand, because there must be some problem with the return they must be expecting.
No. As far as the way we are seeing it, government has reduced their advertising spend across the board on all media. They have significantly reduced by 70-80%. And this is not something which is in our control. Government advertising is driven by government policies. So there is not something that we can go and pitch to them or procure the business by, making a hard sell for our business. They were advertisers, big time advertisers on the media, across medias, but since they have reduced their spending, there is not much we can do about it in that area, and that's why concentrating more on the corporate ad sales, and that is where we will see traction once the quality of films pick up.
So my question is regarding slide 9. So in distributor revenue, there is others 149 for H1 FY23, 149 million. So what is that others? Can you elaborate, please?
Yeah, so for this 6 months period, what you see is 14.9 or 15 crores revenue, and if I'm correct for Q1, this number will be close to 10.5 crore, is the gross revenue that we book for the distribution business. That is, if you were there on the call sometime back when there were questions around distribution business, we explained that it is picking up good traction. In this quarter, we have released 14 movies. But to clarify, since we have an accounting background, all of us, the way the revenue is booked is whatever billing, when a movie is procured by us from producer, he would bill us, and that goes as my expense. And whatever revenue is generated at the theaters, the distributor share come to me, and that becomes my income. So when I say that I have generated 2 crores of profit or 1.9 crores of profit from this revenue or this business line in this quarter, against that my top line for the quarter is 10.5 crore, or for 6 months it is 14.5 crore. And this is something which was not there in pre-pandemic period, and therefore you don't see a corresponding revenue there. So my request would be not to look at it as a top line, but this should better be understood as a net revenue, because as Rajesh explained, our policy here is to take zero content risk, near zero content risk, and therefore it is better to look at it what kind of net revenues we are generating. So here in Q1 we generated 1.9 crores, and in Q1 plus Q2 we generated close to 3 crores, 3.2 crores of revenue, net revenue. But to answer your question, what is this 14.5 or 10.5? That is a top line attributable to my distribution business.
So to elaborate it further, in distribution business, you mean to say that you don't take any content risk even if movie fails. Is that understanding correct?
Yeah, so you're right, absolutely rightly captured. If it was a big budget movie, they might insist that a distributor should pay a minimum guarantee to, say, a producer, which is what we don't do. All these movies are distributed on either a percentage commission or a fixed fee commission, which means I don't give any commitment to the producer that how much money I will pay him, but he comes to me because he sees a lot of value in UFO, because we have this network and the reputation of last 2 decades and the connection in the exhibition business, because of which otherwise he was unable to reach out to the theaters, but through UFO's risk-free distribution model, at least he can reach out to the exhibitors and do some collection. Therefore, our target is not those, the big budget or A-class movies. We are more into focusing into quality movies which are from regional side or some of the Hindi movies with not so big star cast, where the producer doesn't have an expectation of fixed minimum guarantee.
How scalable is this business?
So I'm sorry to interrupt you.
Let me take this question. We can request sir to go back in the queue. So scalability, again, if you actually go back to our 2-quarter back presentation, we had very categorically said that this business we are not looking more as a revenue driver or a profitability driver directly, but what we were observing was, as the competition was intensifying in our co-business, it was becoming more important for us to have more deeper kind of a connect with my exhibitor and distributor community, which fetches me my rental and distribution revenue or CDC revenue, and in turn my advertisement platform. So till the time we got into distribution business, we were in a way on a sideline and a service provider. The moment we are now into this distribution business and we have distributed these 66 movies, which means we are in direct connect with the theaters, they have started looking at it more like a deeper level partner, and this has more strategic value, which will help us to retain these screens and grow these screens. But it is not just a strategic and a qualitative importance. Additionally, it is fetching me this steady revenue line. Coming back to what number of movies you can distribute, as we said that this quarter we did 14. All India there were 550 movies that were released. But the scalability entirely depends on how many movies come in the bucket which I explained you.
And this is a business which is, as I had said, works synergistically well, because if we are pushing South content into the North markets also, so to put things in perspective, South releases almost 1,000 films by themselves across the 4 main languages. And this is, even if we convert around 10% of these movies into the North market, it increases my content flow in the North market significantly, which will reflect better for us in our CDC and advertising revenues.
Okay, sir. This was very helpful. I have more questions. I am joining the queue again. Thank you.
Sure, sir.
Thank you.
Thank you, sir. And the next question from Kunal Shah from Anam Investment. Please go ahead.
Yeah, thank you for the opportunity. So actually taking forward...
Can you speak a little louder, please?
Hi, Kunal. We are unable to hear you properly. Yeah, so if you can come close to...
Is it better now?
Yeah, much better.
Yeah. Hi, thank you for the opportunity. So the question is actually in line with what previous participant was asking. So in the net revenue that we report for the film distribution, what would be the contribution there, or how the cost would be there in that?
Okay, so it's very simple maths. As I explained, just imagine a Marathi movie wants to get distributed through us. We tell him that my fee will be, say, either 5%, 7% of the share that I collect for you. No commitment given. He gives me the content. I enter into the arrangement with, say, 150 theaters in Maharashtra. Whatever collection happens, if my revenue share agreed as per the understanding is 50%, 50% comes to me. Assume that collection becomes 10 crore, argument's sake.
Okay.
Now, of the 10 crores, my share is 5 crores. So 5 crore will become my top line. Okay? And so my revenues will be 5 crore from this movie, for example. And since my share is only going to be, say, mathematically easy 10%, which is not that high normally,
right.
Then the distributor will correspondingly bill me 4 crore 50 lakhs. So 4 crore 50 lakhs becomes my cost. Okay? So net, therefore I would always going forward be bringing out 50 lakh in this case, which is my net margin, instead of explaining that my top line is 5 crore. That 5 crore has no meaning as such to me. I mean, to my investors. More important is this 50 lakh. Okay? And we are also in discussion and figuring out whether, because we are of the view that this should be more represented even in top line as net, but it is more like an accounting technical discussion. So that is going on. If that happens, then we'll start reporting only the net level.
Okay, and in this net, suppose say 3.2 crore for H1, the entire thing would flow to the bottom line?
except the direct cost of the manpower relating to that, and the manpower cost, which Rajesh was saying, there are two parts. One, which is directly working on this. This will be a very small team of 4-5 people working at HO. Okay. And except one, the rest will be at a very junior level. The bigger cost comes in the form of my extended staff, which is sitting in my regional offices where this distribution is happening. But this is where the synergy comes in. In any case, I am absorbing their cost as part of my core business. They are doing this incremental work, but no cost will get, in a way, reduced from my 3.2 crores. So somebody doing, a segment report, there will be apportionment. But at a console level, if we see, against this 3.2 crore, those only HO level small manpower cost will be there. The regional manpower cost is basically the synergistic move that we have done.
Okay, got it. And so coming back to again government revenue, so any things that have changed fundamentally, government using different mediums to market, or is it, say, they're approaching more digital medium, or they're using their free dish platform? What have you seen there?
Not really. I mean, what we have been observing is while they are spending some amount on print, on all other mediums, they have reduced their costing across the board, even on print, compared to what they were spending earlier. So there is an overall reduction in their ad spend.
Even in television.
Across television, hoardings, print, they have reduced their cost significantly. So some level of cost restriction is happening at their end.
Right. No, but so the point is that, with Aadhaar and all, now the government has so much data that it's easier for them to market directly via SMSs and all. So have you seen that happening?
Easily for them to market through?
SMSs or directly messaging the beneficiaries of the schemes.
So to be honest, I have personally not seen any kind of such campaigns happening at personal level, and more or less, even if we see the digital medium where at least we are present, we don't, I mean, most of us would be present, we don't see the government spending happening on those mediums. So we see more like probably it's a pause at the government end, but certainly there are and there will be areas where both state and central government would like to reach out to the residents of the country to explain what schemes and what moves they have.
Right.
So at some stage this should take a turn, but as Rajesh mentioned, we have proactively started looking more as to see how we can push corporate more, because ultimately we have to sell 12 minutes or 15 minutes.
Right.
If I can sell it through corporate, then that is it. So, and that was the reason why from my IPO time we were highlighting the government segment and corporate segment. We wanted to explain how our dependency on government we are slowly reducing. Unfortunately, COVID and post-COVID, this has reached a stage where that revenue stream has completely dried before corporate could take it over.
Right, got it. The next question is on the capex. So, what's the capex plan for FY23?
FY23, this is current year, right? FY22-23.
Right. Yeah.
So this year we had absolutely decided not to go on a capex because we used to have 40-50 crores of annual capex, which is required to maintain my network. But we have been seeing that this capex which we do is completely in our control. Wherever we need, we do it, and we can also delay or prolong the upgradation of my own leased equipment. And therefore, in this year, we decided not to exceed my capex beyond 22 to 25 crores. In first 6 months, we have spent 10 crores, of which almost 7.5 crores is on the capex on servers, and almost 60% of that we had to invest because some of the items were going out of their life. I mean, end of life, and therefore we needed to replenish it much before the time. And this will help us get some savings in my AMC related costs. Some of those are evident in my current year numbers. So capex, to summarize, 6 months capex 10 crores, full year capex estimate around 25 crores. Of the 10 crores, 75% is on servers. Of that, almost 60% is because of the end of life situation.
Oh, got it. Perfect. And so one thing I observed in the result is that, the advertisement revenue sharing has gone up, but the absolute advertisement revenue has gone down. So that, doesn't, I'm not able to understand what's happened there.
Yeah, I'm glad you have, because otherwise we had to explain it on our own. So it's a very important observation. If you see Q1 versus Q2, revenue has dropped by 4.5 crores, but ad share has gone up by 2.4 crores. So if you see, my ad share level has two components. One is the minimum guarantee which I give to a theatre of say monthly 10,000, and the contract is such that it provides for a certain percentage of sharing, say 25% of revenue or minimum guarantee, whichever is higher. So till the time the revenue is exceeding say 40,000 in this case, we will keep paying 10,000 as a minimum guarantee. Okay. So ideally, if this was a hit in this quarter, similar should have been the hit in Q1 also. But what happened was, since we were just exiting the pandemic, the minimum guarantee arrangement where we were committing to the theatre a certain minimum amount, we had planned in such a way that it was going to go closer to pre-pandemic level from Q2 onwards. Therefore, you see there is an increase in Q2 versus Q1, and correspondingly there has been, in those cases, there has been increase in rental charges also. Now, if you look at the number, in other words, Q1 numbers were lower on minimum guarantee, which is part of sharing, because of these strategic reasons where we had discussed with the theatres that we will increase it from Q2 onwards, which in other words means that this will be more or less my minimum guaranteed commitment for the rest of the 2 quarters for this year, irrespective of my revenue lines. But if my revenue keeps going up, which is what is the expectation, till the time I hit the minimum guarantee threshold, I am not required to share anything more, and therefore the percentage will keep dropping. So this is the reason why you see that revenues have dropped, but still in Q2 my MG has gone up, and therefore the margins have disproportionately gone down.
Got it. So, going forward, so if I were to say my revenue goes up,
can you speak a little louder?
Yeah, sorry. So going forward, suppose if my revenue went up, how much would be the incremental share from the incremental revenue that would be needed to be shared with the exhibitors?
So it goes each theatre, just to again repeat an example, how much is this my revenue per quarter, per screen? Just give me a minute.
Sure.
So per screen revenue which is reported right now, on Q2, if you go to slide 12, you will see a 37,000 rupee revenue. Okay? Per screen. So which means monthly 12,000, for argument's sake, let's take it 12,000 for sake of simplicity. Okay? So 12,000 is my monthly advertisement revenue. So 25% of that translates to 3,000 rupees. So if I didn't have a minimum guarantee with this screen, I would have paid only 3,000 rupees. But since from Q2 my MG has kicked in, now I'm paying him 10,000 rupee as minimum guarantee, which is equal to his rental. Okay? But let us keep rental aside and only compare 12,000 rupee ad revenue with 10,000 rupee MG. Now what it means is, in next quarter, if hypothetically this revenue doubles from 12,000 to 24,000 a month, my 25% would still be 6,000, which is lesser than 10,000. So in Q2 also, for this theatre, my hit will be 10,000 only, whereas entire incremental advertisement will flow into margin. So what happens with this theatre, depending upon how the contract is structured with each theatre, it becomes more like but more or less the structure is such, only the percentages differ and the minimum guarantee amount differ. But I tried to explain you the concept, how incremental revenue can go into the margin.
What would be the broad range of that percentage right now after COVID?
Pardon?
What would be the broad range of that sharing percentage after COVID now?
So currently, because of this unique situation, you are seeing a sharing to be 66% for H1. We are expecting it should come down to the range of 45-47% in a normal scenario, and eventually settle to 40%, which was my pre-COVID level.
Got it. Great. And one
Thank you.
last question is on this.
So I'm
One last
sorry to
question on this.
interrupt you.
Yeah.
So I request you to join back the queue again for the next question, sir.
Sure, no problem. Thank you.
Thank you. I request the participants to restrict with 3 questions in the initial round and join back the queue for next questions. Next question comes from Manan Patel from Ayurved Capital. Please go ahead.
Thank you for the opportunity, sir. Am I audible?
Yeah.
Yes,
Please go ahead.
absolutely.
Thank you, sir. And sir, first question is regarding the impairment. I think sir mentioned that we had an impairment of 2.9 crores in CDPL. And on the standalone, the impairment is almost 13 crores. So can you help me understand what this impairment is related to? Because from what I understand, till last year we were exercising options on CDPL or warrants. So can you help me understand this?
Yeah. So firstly, very important first point before I get into the numbers. Till last year you were exercising warrants. This year we have taken provision for impairment. Why? Okay. So first, and let me answer this. This is according to me a more critical question, and also I'll answer the numbers part of it. This Sinistan was a more strategic investment that we decided to do, which we thought will help my advertisement revenue in a peculiar way, and this investment was finalized in December 2019. Of course, Sinistan team has its own business plan, which we wanted to flourish the way they wanted it, or they had planned it. But unfortunately, in COVID, like some of the other businesses, this business came to a complete standstill. Unfortunately, the revival was completely dependent on more of a Hindi content comeback, and Hindi content started coming back much later. Till that time, there was an ongoing cash burn in this company, and that cash burn was being in a way funded through the investment infused from our side, which was as per the investment agreement. Now, this particular business beyond 2021 or beginning of 2022 was not looking more meaningful to us, so we decided to not continue investing in this business because we had more important things to handle in terms of bringing our core business back on track. So a decision was taken not to continue any further investment beyond whatever was agreed in 2019. And now coming to your question, why were you exercising options, your coupons till 2000 last year? The answer to that is because that was a contractual arrangement and an obligation on us under my 2019 agreement. So when we fulfilled that contractual obligation, which helped us from keeping some of the other obligations falling on us away, then we decided to move ahead with this, and therefore, in other words, we have decided not to further infuse any funding in this business, and as a result of which this business may not grow or be able to go its pre-COVID level, and as a result of which we decided to take a provision on my entire investment, which was 291 lakhs in Concall level. With this, whatever investments we have done and whatever exposure we had in Sinistan is fully provided for, either in the form of the impairment provision or in the form of the losses which came into my Concall over a period of time. So to answer your question, why you were exercising your coupons till last year, it was more of a contractual arrangement. Had to be done, otherwise we would have got into a different legal tussles. We honored that commitment. We still were hopeful that the business may shape up well in 2021, but post the second phase of COVID, which was Delta, we were more or less clear that we should focus more on our core business. Therefore, we have now taken this provision on Sinistan and cleaned our books to the extent of this investment.
That was very helpful, sir. The second question is, so you were going to have some more clarity on the Nova Cinema concept. So any updates on that?
Yeah, so Nova, we are progressing nicely on that. our first project is coming up near Nagpur in Mihan area. We hope to see it going live by next month. And there are additional 4 projects which are currently underway in Uttar Pradesh. So this is gaining traction. As we had said earlier also, this is a long-term business and it will take some time to fructify. We are working with local level players and providing them service and know-how and inputs so that they can create more cinemas. That is the basic idea of Nova. And as I said, with these 5 projects coming up, we will see some traction which will drive the business further. These will act essentially as demonstration units which will propel the business further along with other entrepreneurs. Essentially, it's a very asset-light model. We are basic service providers to these companies. The idea is to grow the number of cinemas in the country, and this is what we are hoping to achieve with this model.
Okay, sir. And the last question is related to the sale of product business, so lamps and all that we sell. So from what I understood, historically it has been a decently profitable business. But in this quarter, if I look at it, the sale is around 28 crores versus the cost of 25 crores. So the margins have come down. So is it a sustainable thing, or like the margins will stay down from here on, or is it one time?
So I'll answer it in 2 parts. One, whether in this quarter we had a lower margin. So first answering that and then giving you what we feel about this line of business. 20% is my margin in this quarter against this business, and 20% on the sale value. Okay. Now, if we go back, even in pre-COVID period, my margin used to be, if I tell you 21% in FY20, 15.4% in FY21. In Q2 of FY20, it was slightly higher to 25%. But more or less, we have seen in pre-COVID period, the combined margin on sale of equipment and sale of lamp in the range of anywhere between 16 to 20%. So this continues to have the same margin. In fact, 2 components. One is the lamp. Lamp, we know what margin we are selling it at. The only delta comes from the sale of the equipment, which is predominantly in the Middle East region, wherein some of the contracts, depending upon how you negotiate, you might get slightly higher margins, which happened in Q1. And Q1, our total margin was 25%. So to answer, the margins have not dipped. In fact, they are there where they used to be historically at 20% level. As regards this revenue stream is concerned, it is more like an ancillary revenue stream to my core business. Since I'm in digital cinema, since I'm an entrenched player, reliable player, people prefer us when they go for procurement of their own equipment. And this would continue to give this certain percentage of my revenue and profitability coming from this line. We are hoping that in next few quarters at least it will be on a higher levels because of some expectations in Middle East, where we are hoping that because the previous sets of equipment are reaching end of life, we may see some uptick in either sales or some other structures there. So this is how we look at this entire revenue line and the potential of this revenue line.
Okay, so that's great. Thanks a lot and wish you all the best.
Thank you. Thank you.
Thank you. Next question comes from Vaibhav Bajjaya from Honesty and Integrity Investments. Please go ahead.
Yeah, hi, sir. Thanks for providing the opportunity. So in terms of government revenue, before COVID, can you, at the time of, say, for example, in financial year 2019 or 9 months of financial year 2020, how much was from the central government and how much was from the various state government or local bodies?
So broadly, central government ministries used to contribute anywhere between 75% to 80% in some cases. But what we were seeing was the trend was where the state government and PSU share was slowly increasing, and from 11-16% in the initial years like 2014-15, it had one stage reached a 25% level. But major contribution, a lion's share, was coming from central government.
And in the central government, is there a separate department which just handles the whole government advertising piece, or you have to go to separate ministries and kind of ask for the rightful share of the pie, or how that whole thing is organized is what I'm trying to understand.
So there is a central agency, DAVP, which is now Bureau of Communications. They basically channel all the advertising of the various ministries through them. So typically we would make pitches to the various ministries, but all the advertising gets channeled through this agency, centralized agency. So individual ministries on their own do not release the advertisements. It comes from one centralized nodal point.
Yeah, but how much should be through print and how much should be through theatrical advertising? It is decided by individual ministries, not by DAVP, right? That's what you're talking.
Technically, yes.
Technically, you're right, but everything gets channeled through DAVP or Bureau of Communications. As I said, right now what we are seeing is advertising some level happening on the print medium, while all the other mediums have been totally curtailed. Even print has been significantly curtailed from the pre-pandemic times. So there is an overall dip in the ad spends. So earlier they would be spending around 300-400 crores, let us say, in a quarter, and in this Q1 of this thing, we had just seen around 23 crores happening. So overall significant dip has happened on the government advertising front.
Yeah, on that front, last quarter, if we read the transcript of your last quarter, you seem to have kind of suggested the opposite, that government has not curtailed the spending in any other medium, and it was just that in cinemas they have curtailed the spending. But this time you're saying that it is across the medium. So
I guess that was not the situation, because the bigger pain point for all of us is not just our medium. For all of us is that government has in a way curtailed its spend, and it's not just our transcript or what we said in the last quarter, but that was evident in some of the questions that were asked in Parliament when the answers were given. I will try to pull those public domain information and share it with you, but I don't think we have mentioned that the spends on other mediums is strong or growing, and only in cinema it is going down. In fact, historically, if you see, in cinema was much late entrant. We became DAVP approved only in 2010 or 2011. Till that time, government used to spend in other mediums, but the pace at which this in cinema medium was liked by the government agencies was evident from the fact that from 0 crore in 2009, we as an industry in cinema, not UFO, in cinema as an industry, reached a level of close to 350 crore in central government when their spends were like 1,200-1,400 crores. So there has been a disproportionate liking that they had, and there are reasons which we feel go in our favor, that we can give them the right kind of visibility, the larger screen, no remote in their hand, they can do targeted advertisement, language-based advertisement. That sell through. So we were probably the larger beneficiaries when the allocation, when somebody sees allocation in 2007-8 versus 2017-18. So I would actually urge my IR team to connect with you to confirm your understanding, where we mentioned that the spends on other medium is strong, but on in cinema it is weak. Government spending. We probably would have said that the advertisers have not stopped their advertisement spends on other medium, but those are the corporate advertisers, the regular advertisers. This is not the government advertisers. So there could have been a question that whether the advertisers as a whole have reduced their advertisement spends. Answer to that has been that in other medium they are doing strong and therefore they should do better on our medium as well, and which happened in Q1. Not just us, but PVR Inox also saw uptick in their ad revenues, which comes from corporate. So we need to reconcile this. This is my position. We will confirm it separately offline on a call, and my IR head is here and he will connect with you. And you please help us identify where you have seen it in this transcript or the earnings transcript last quarter.
Yeah, sure, for sure. So I will connect separately on this. I think that's it from my side. All of my questions have already been answered. So that's it from me. Thank you.
Thank you.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. I repeat, ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. We have a follow-up question from Vipul Kumar Shah from Sumangal Investments. Please go ahead.
Hi, sir. Can you comment on the performance of Caravan? How is it shaping up post-COVID?
Caravan is pretty much very low performance right now. We have parked our vans and we are awaiting empanelment from government, and right now we have very low business on that. So around 20 lakhs business we have done in Q1 and Q2 both. So not much traction over there. But we have curtailed our cost entirely on that.
And lastly, sir, for my understanding, this CDC revenue, so what is it like? I think previously you must be reporting it under some other head. So if you can briefly explain what these CDC revenues are.
CDC is my core revenue. When a movie a distributor wants to show his movie in a theater, in the past he used to give a physical reel. That's exactly what UFO made sure and eliminated through its network. Now there's no physical expensive reel is required to be invested by the distributor for last 17-18 years, ever since UFO came in. And in lieu of that 70,000-80,000 rupee cost, what we charge is a content delivery charge to the distributors for taking their film from their place to a theater and ensuring that it plays out in the theater only as per their instructions. So if they have said you play it out 3 times a day, it will play out only 3 times a day. And for every playback, we charge them a per show fee, that is one model, or there could be a fixed weekly fee, a variant of that. And the combination of this gives us what we call as our content delivery charges, is revenue coming from distributor. This is nothing but a small share which we are charging to the distributor community for a larger cost arbitrage or cost saving that we have brought to them over a period of time. And therefore you see movie goes into 2,000, 3,000 screens, the larger Hindi movies, or even regional films like Punjabi, Marathi film going into 250, 300 films, which was not the case before UFO. So this is my core revenue.
So, but previously this revenue you were charging for 2-3 weeks only. Beyond 2-3 weeks, you were not charging. It was something like that, right?
You're absolutely right, sir. In Hindi, the model continues. In the Hindi movie circuit, we charge for week 1, week 2. Week 3 onwards, there is no charge. In some cases, the distributors have an option of choosing a package, but these are variants. But primarily what you said is right. The model remains the same.
Okay, sir. I have so many questions, but I'll get in touch with your IR. Thank you so much, sir.
Most welcome, sir. Certainly.
Look forward to that, sir.
Thank you. We have a follow-up question from Kunal Shah from Anam Investment. Please go ahead.
Yeah, hi, thank you for the opportunity again. Actually, just a clarification I wanted. So CDC revenue you explained. Then what is the VPS services revenue that we report now?
Okay, so good. Good you have asked this question. So if you remember from 2015, when we did the IPO, we were trying to explain to the market that there is a sunset in my revenue line, and therefore we used to show our revenue as D cinema and E cinema. Now what happened was, after 2019, my sunset business attributable to Hollywood studios, both in India and international, reached a sunset, which means whatever revenue I was supposed to lose contractually, slowly as a waterfall, that I reached that timeline. So after that, there was no meaning in showing D cinema, E cinema revenue and confusing the market. Therefore, now we have repositioned from Q1 the revenue line from distributor as content delivery charge revenue and virtual print fee revenue. Wherever you see a virtual print fee revenue, there is an arrangement of sharing of that virtual print fee with the theaters, whereas in content delivery charge, that entire revenue directly goes in my contribution. As regards VPF revenue line is concerned, the model is same. This is the money received from distributors for delivery of their content and play out of their content, but contractually there we have entered into an arrangement with theater to share the revenue, and therefore you will find a corresponding cost item of virtual print fee sharing.
Okay. So just to elaborate a little bit more, this
so if you go to
revenue...
slide, before you proceed, if you go to slide 12, you will see that VPF revenue, and correspondingly there is a small bar which will show the net revenue. The difference between the two is what we share, which is a significant share, as high as 85%.
Slide 15 you are talking about, sorry?
Can you, we couldn't hear you, please.
Okay, sorry. The question is again, so in this VPF services revenue, so if we were to see VPF, E cinema and D cinema previously, we had sharing only in D cinema, and in E cinema there was no sharing, hardly any. So
yeah, you're right, hardly any. Some sharing.
Yeah,
correct.
Yeah. So would it be like if we were to equate D cinema with VPF services revenue now and E cinema with CDC, would that be a right way to model it going forward as well?
It will be more or less right, but there are variants in that. For example, we would have acquired certain screens for VPF arrangement which were not there in the past.
So typically, these are screens where the equipment and all is owned by the cinemas. We have not invested in them. And they, cinemas, when they buy their own equipments, typically approach us for their AMC services, for collection of their VPF. In many cases, advertisement rights also get assigned to us. So it's a zero investment areas where we share the VPF.
But you are right. If you go back historically, since you are tracking us that way, the major chunk of VPF, what is shown now, will come from the bucket of D cinema. But D cinema was going down systematically as per contract, and therefore we thought it is better to now present what is my distributor revenue which is not getting shared, which is CDC. What is my distributor share which is getting shared, which is VPF.
Okay. And so just to elaborate a little bit more, so as sir was saying that where the equipment is owned versus leased, does that also make a difference in the classification here? Because I was of the opinion that it doesn't matter if the equipment is owned.
That is not the only criteria. The basic criteria is the screens where I am not required to share my distributor, which is purely my revenue of my network, with content delivery. And contractually, if I am required to share the revenue, there will be two categories. Either invested or I have invested, still I am required to share. That's a contractual arrangement. So if I am contractually to share the revenue, it becomes a VPF service revenue. Okay?
Okay. Got it. And so the in case of VPF services revenue...
Let him take this last question. Sorry,
not a follow-up.
Yeah.
The last one. So in case of VPF services revenue, the exhibitors will mostly be the multiplex chains, right? In that case.
There you are.
Yeah, right.
Got it. Perfect. Great. Thanks. Thank you so much, ma'am.
Thank you.
Thank you, sir. That would be the last question for the day. Now, I hand over the floor to Mr. Asim Barde of DAM Capital for closing comments.
Yes, thanks everyone for joining the call today, and also to the UFO Movies team to giving us a chance to host them. Wish you all a good day ahead. Take care.
Thank you.
Thank you. Ladies and gentlemen, this concludes the conference for today. Thank you for your participation and for using Sabha's conference call service. You may disconnect your lines now. Thank you and have a pleasant day.